In this video, let me explain about the concept of amalgamation. Amalgamation means one or more companies join together to frame a new company. That term we call it as an amalgamation. Normally, the company has to be enlarge their business activity, has to be resourcing more capital, large scale of production needed. Then the company go for an expansion activity. At that time the company choosing the amalgamation concept. So after amalgamating one amalgamation is done, the company frame with the new name as well as the logo as well as their own identity, then started the existing in business. Example of amalgamation: the company A is amalgamating company as well as the company B is also an amalgamating company. They put together join together after formation amalgamated company, as we call it as an A and B company. So this is what the simple example for amalgamation. So next we are see the real time example for amalgamation. Maruti Motors operating in India and Suzuki based in Japan amalgamated to form a new company called Maruti Suzuki Limited. So this is what the example of amalgamation. So Maruti Motors located in India, Japan located in the Japan based company Suzuki located in Japan. So they put together, they come with a new company Maruti Suzuki Limited. Same like that, the Tata Sons amalgamated with the AI group, they start a business, Tata AIG life insurance company. So these should be the two examples of amalgamation. So what are the advantages of amalgamation? We are going to discuss now. The first thing is the capital. When the company two company amalgamated, the capital would raises. That will be a good sign for the business. That is what amalgamation is done. Then management cost will be reduced, as of course the maintenance cost as well as the management cost, it is the big cost to the company. At the time when the company go for amalgamation, these costs would be reduced. Then benefits of large scale production is possible at the time of company used to go with an amalgamation concept, because they use their new technologies into the production, as well as the capital. Also the capital is raised, it will be useful for larger scale of production, as well as the research and development also is there when the company is together. Then the monopoly market can be achieved when the company is amalgamated. Say for example, Nescafe Brew is both are the competitor. If the two company, Nescafe as well as Brew is the competitor of Nescafe is the competitor of Brew. If the two company, both the company is amalgamated, they can achieve the monopoly there, because anyway there was one competitor, but main competitor is Nescafe as well as Brew only. If the two companies are merged, the monopoly can be achieved. So there one Nescafe as well as Brew, if they are amalgamated, they are the leader into the market. So in that way the monopoly competition achieved. Then the next thing is avoiding competition. For that only amalgamation needed. So if the two companies are amalgamated, can able to increase their efficiency as well as can able to expand their activities too. So these are the advantages of amalgamation. So when the company amalgamated, what would be the disadvantages we are going to discuss now. So if the business combination brings monopoly in the market, which may be harmful to the societies, because of they increase the price of the product, as well as it is the possibility of creating the artificial demand. So in that way it will very harmful if the amalgamation is done. Then the next thing is the identity of the old company finishes. So if the traditional based companies, they following some basic traditional things, but in the case of new amalgamation has to be adopt a new technique. At the time the traditional is overcome, so in that way the company lost their identity. Goodwill of the old companies decreases because of adopting new things. If the new things may not be liked by the common public because of traditional thing. The next thing is the management of the company becomes very difficult because of two companies will merge their production as well as the expansion activity enlarge. At the time it will feel difficult, management feel difficulty to manage the process and all.